Good morning, everyone. I only have two new long positions for Wednesday morning, and the first one, the highest quality one, ELP, it's considered a higher quality long position because there's not a whole lot of beta in the overall stock. It's not a volatile stock, and it's pretty liquid. As you can see, the day before, it still traded 300,000 shares, and that's below its average daily volume, right around 500,000 shares. So ELP is definitely liquid. The problem is this chart, it's a little tricky. So when I saw this chart, I was like, this is a perfect bounce reversal candle pattern right at support level. If you look at this 2017 January support right here, it's bouncing right off that support area. Huge volume on the reversal with a big spike in BOP to a higher green level, and that's an engulfing bullish candle pattern with a close near the high of the day. The problem is that telechart, unfortunately, and I do not know why they do not do this. They do not account for dividends. So whenever a stock goes ex-dividend, telechart does not adjust its chart. So the day before, on the 1st of May, ELP adjusted its share price because it went ex-dividend. So what you should be looking here is you got the right price, but this bar right here is the ultimate low, and these two bars right here are about right up here. If you go to finviz.com or stockcharts.com, you can see it, but I use Telechart Warden version 7 Gold as my standalone charting software I've used in my entire life, so I'm used to seeing it. So ELP, it looks like it's a beautiful support bounce reversal on heavy volume, a BOP surge, and a bullish engulfing pattern, candle over the intraday real body of the first, but these 2 days should be higher. So going long still, doesn't matter. I'm using this chart for my long decision, but I'll be using the limits and resistance levels of the other charts on stockcharts.com and Finviz. My first cut loss level will be a move below this low a day, 874. So if it hits 873, I will be gone. And the next low, this bar right here, it's wrong. It says 887, but the real low is 860. So my final cut loss level is 860. The 428 low, that is incorrect on this chart, 860. So if it moves below 860, I'll be all out. It moves below 874, I'll be out of half. But this is still a good chart pattern. Even if this candle is up here, this volume surge and BOP surge is good enough with that little risk here, 2%, to possibly get a move back to the old March highs, possibly October highs, and then potentially a breakout into new 52-week highs. So we'll see. But that's the higher quality long position. It was only in my price volume BOP scan, so it's 1% of my account capital, and that's it. There were more sell signals today to raise capital than there are long signals to initiate capital. That's kind of a change in trend. And with the market acting the way it did today, with Apple earnings tonight, futures selling off, and the FOMC releasing their minutes sometime around 2 p.m. on Wednesday, I think that we're kind of setting up the recent move to sell the news. And there's a lot of this. See MTCH's chart, see that reversal? BRKS, I saw a lot of that today. IAC, which is a 25% profit taking signal. You can see that intraday reversal off the highs. I saw a little too much of this to be comfortable with the way that the market is acting in the super short term, and with the only long position being a utility stock, that should be a red flag. And then the only speculative long position for Wednesday is also a defensive related speculative long position. MICT is an aerospace and defense stock, but as you can see here, it's starting to bottom out, and as you can see here, it's got a series of higher lows. It's kind of making a little symmetrical triangle pattern here. Looks like we got a bounce right off support. I'm expecting it to break out, hopefully touch and test maybe the 200-day moving average, the 145 stock price, then maybe the 158, then maybe the 177 price. We'll see. It's not a big mover, so we don't risk a lot, and there's actually 3 support levels to use. The first cut loss level is 120, all these lows here. Then the next cut loss level is 116, and then 111. So yes, I will be using 3 stops on this position. My limit order will be 124, and once again, I have a mid six-figure account, and I'm not going to put more than $1,000 into this stock. It's just, I don't love it. Let's say this pattern was a bit more symmetrical and it was still going sideways for maybe 3-4 more weeks, and it had max green bop that entire time, and then we got a move today that was like this but on much heavier volume, and it produced one of these pocket pivot point signals, then yeah, let's push it. But with this signal in this market, $1,000 is good here. 1% of my account capital is good there. Keep it simple. Those aren't great signals. They're just good enough signals with the proper reward risk to take. But once again, not quite sure what I'm seeing in the market here. Seems like we're super extended short term on the NASDAQ. It seems like that we've been lagging pretty bad in the Russell 2000, once again breaking out and then immediately rolling over. And the S&P 500 and Dow Jones Industrial Average are just biding time. Still looks good for now, but we could easily roll over. So be prepared for everything. All right, everyone.